If you start trading and master it, you can create an income generating machine. But if you don't have the right foundation, you can go years wasting your time and your capital, putting you further behind than you already were. I've been trading for 4 years and I'm completely self-taught and have never had a mentor throughout my entire trading journey. My biggest mistake was just that, not finding a mentor, because if I did, I would be 10 times further than I currently am. In this video, I'm going to showcase everything you need to get started day trading, including your mindset, the software you need, risk management, and mathematics. And last but not least, the tools that I personally use to this day to consistently make over $20,000 per month.
To this day!
If you follow this video without skipping a step, you can easily go from 0 to 10K per month. By the end of this video, I want you to have an actionable plan that you can use today to get started in your day trading journey. Now let's get into lesson number 1 and make sure that the foundation that everything that is being built upon is firm. The most important aspect with trading is making sure you have the right mindset. Every single one of us have flaws within ourselves. A mindset that will thrive in trading acknowledges these flaws and works to improve upon them. A mindset that will fail in trading is neglecting these flaws and thinking you're perfect off rip. Trust me, you're not that guy, pal.
You're not that guy, pal. Trust me, you're not that guy.
Now imagine this coin. If it lands on heads, you make, let's say, $500. But if it lands on tails, you lose $200. The probability of this coin landing on either side is 50-50. Damn. And this can translate into having a trading strategy with a 50% win rate. If you flip a coin 10 times and the first 5 land on tails, how will you react to losing $1,000? It was actually tails. Having a probabilistic mindset will have you thinking the next 5 are going to be heads and winning trades. With the next 5 trades, you can make $2,500. So you're going to be up $1,500 in total. Now, not getting emotional after the outcome of a singular coin flip is what your goal as a trader should be. Focusing on the bigger picture of 10 trades or even 100 and having a probability mindset is crucial when starting day trading. A losing trader's mindset puts importance on the outcome of a singular coin flip. Meanwhile, a winning trader's mindset puts importance on the outcome of 10 or 100 coin flips. With that sample size, you can get a decent understanding as to if your strategy is profitable or not and if you need to tweak it or not. All right, now let's go on to lesson number 2 and talk about charting, software, and tools. These are all things that I've been using for multiple years and continue to use to this day. I honestly believe that I'll continue to use these for the foreseeable future. First things first is TradingView right here. This is where you're going to do all your charting and analysis. Having a good charting software is crucial in this industry because you need to have access to live data and the tools for your strategy to thrive. Secondly is your brokerage. This is where you're going to be executing all of your trades from. And last but not least is Notion. This is where you're going to be journaling all of your trades. I know starting a new Notion is extremely annoying, so I'll be giving out a free template later in this video, so make sure to look out for that. So your process of a full trade start to finish is you analyze it on TradingView, you execute it on your brokerage, and you journal it on Notion. So going over to TradingView, this will look different for everybody. I strongly encourage you to learn how to analyze a chart that is just candlesticks or breaking it down further and looking at the order flow of the market. I wish someone had told me this when I started because 90% of the stuff that I had on my chart back then held me back more than it pushed me forward. I don't want this to be the case for you as well, so please make sure to learn how to analyze a chart that is just candlesticks or order flow. With TradingView, there are a lot of different tools that are hidden which can go over a beginner's head. The first one being a position size calculator. You don't need any external software or calculator to calculate your position size. On TradingView, there is a risk to reward tool on the side panel right here. We would go 1, 2, 3, 4, 5th, one down. Click on this arrow right here where it says projection and long position and short position. These two are your risk to reward tools. Click on it and place it where your entry, your stop loss, and your take profit would be on a chart. Let's say you enter in long right here, targeting this high right here with the stop loss of this low. What would be your position size? We would right click the risk reward tool, click on settings, and we can see our risk in US dollars. And now you can set whatever dollar amount you want your risk to be. So if your risk is $100 on a particular trade, a wider stop loss will have you with smaller size. Meanwhile, a tighter stop loss will have you with heavier size. But both trades will have the same risk on the table. The last thing you should be doing is wasting your time and your mental power trying to figure out how much you should be entering into the marketplace with. You should be focused on executing and managing the trade. And this is where this tool shines the brightest. For your brokerages, the best ones are AMP, NinjaTrader, and Interactive Brokers. You can connect all of these into TradingView. On the prop firm side is TopStep, MyFunded Futures, Apex, and Tradeify. But these names can change because new rules can be implemented into the future. If you want to know the plan on how you can utilize prop firms to get to over 20,000 per month, click on this video right here or in the description below. Now for analyzing your trades and data collection, Notion is a free and easy to use software. I have a template that you can use today for you to track your trading journey that you can use down below. Over here, you can calculate your win percentage, your P&L, how much you risk per trade, and your risk reward. Almost anything that you can analyze with data, you can find in this template. I would highly recommend using this because this was the exact template that I used for majority of 2024. The only reason I stopped using it is because I got a paid journaling software that really isn't necessary for beginner traders. Now going back to TradingView, there are three market conditions: an uptrend where we're creating higher highs and higher lows, a downtrend when we're creating lower lows and lower highs, or when we're consolidating. The best trades will likely be in these first two market conditions because they provide the best risk to reward and highest probability. What you'll be looking for are imbalances when price creates a leg higher or lower. Now, when the market creates an imbalance, it has a higher chance of retracing back and filling that imbalance before going higher. We can use this to our advantage and wait for price to trade into a higher time frame imbalance, then drop down onto a lower time frame chart to determine if the market really wants to go higher off this level or not. Hold up, my eyes are hurting. Because always remember this, for the market to go higher on a higher time frame chart, it has to shift structure on a lower time frame chart. We need to analyze this with market structure and think fractally. When the market is moving higher on the higher time frame and pulling back on the lower time frame, it will be a downtrend. Once the lower time frame switches back into an uptrend and aligns itself with the higher time frame, we have a higher probability of continuing higher. Vice versa for a downtrend. Now we mark out our higher time frame imbalances and wait for price to trade into these higher time frame imbalances, then wait for a lower time frame shift in structure or order flow for us to continue higher and ride order flow higher. This will be our trading plan, and this is the exact scenario that I look for every single day. Going over to risk management now. This is a very important aspect when starting off because this is the foundation that everything will be built upon. I believe that 99% of traders have experienced blowing up an account before, and this is the cause of bad risk management. As traders, we cannot be focused on making money when ironically, we got into this industry to make money. Now, the fundamentals of risk management are average risk to reward, win percentage, and risk on the table. Now with the example from before, let's say you enter into a trade and have a risk limit on that trade. Your take profit will be where you think the market will head towards, and your stop loss will be your mitigated risk. Now, a big misconception with trading is when the market is going down, everyone is losing money. But this is not the case because a lot of my best trades are when the market is going down, when I'm shorting the market. As traders, we can make money when the market is going down or up. My personal favorite market conditions are when it's doing exactly that and objectives are getting met and traded into, and on the higher time frame we can likely not be doing anything. Meanwhile, on the lower time frame, a lot of opportunity is presenting itself. This way, while everyone is sitting around waiting, you're continuing to make money and compounding your account. By the time a long-term investor buys the dip, you have already made your money to the downside, and if the market starts going higher again, you're going to be making money to the upside. Now, the best tool in TradingView is the risk to reward tool right here. Over here, you can set wherever you want your stop loss to be and wherever your take profit to be. Ideally, you want every single winning trade to exceed your risk limit. So every single winning trade should exceed 2 to 3 times however much you're risking. For example, if you're risking $100 on any particular trade, you want to be making at least $200 to $300 on that trade. Now, this is minimum and it can go even higher to $1,000, but the higher your take profit is, the lower the probability of it being hit. This way you can have a win percentage of less than 50% and still continue to be profitable. For example, if you're risking $100 per trade and your winners are $300, let's say you win 4 out of 10 trades. You make $1,200 on your winners and your losers lose $600, which still puts you at a net gain of $600. Now, the most amazing aspect of trading is how scalable it truly is. You can go from making $600 to $6,000 by doing 0 extra work and just increasing your risk limit. Now, the second fundamental is your win percentage. This is how many trades you win compared to how many trades you take. This number will increase depending on your strategy and your analysis. The better you are at analyzing the market, the higher your win percentage will be. Now with all of this, we use the data that we've collected to come to a conclusion on how much our risk should be on any particular trade. Ideally, you want your risk to stay consistent with every single trade so you continue to play within the probabilities instead of competing against them. The two ways of keeping your risk consistent is either risking a certain percentage of your account or the same dollar value on every single trade. So for example, you have a trade and you're risking $100 on this trade. It goes all the way into your take profit and you gain 3 risk limits on this trade. You gain $300 on this trade, but for the next trade, you, let's say, risk $300 instead of $100. And instead of hitting your take profit, it hits your stop loss. Even though you won 3 risk limits and lost 1, which should still net you 2 risk limits, you are still break even on your P&L. If you continue to do this, it will hurt you more in the end. Now with all these data points, the math into becoming profitable is right here. This is called a risk to reward table. Here we can look at different risk to rewards and determine what your win rate to risk to reward should be to be profitable, break even, or unprofitable. So for example, you have a 30% win rate. You would need a 1 to 3 risk to reward to be profitable, but if it goes to a 1 to 2 risk to reward, you will be unprofitable. Now, if you have an average risk to reward of 1 to 5, you would need at least a 20% win rate to be profitable. But if it's an average of 1 to 4 risk to reward, a 20% win rate will keep you break even. The more bottom right you go, the more profitable you get, and the more top left you go, the more unprofitable you get. Your goal as a trader is to have a strategy that is within these green zones right here. Screenshot this right here so you can always determine if a strategy will be profitable or not depending on its risk to reward to win rate. Now let's say there are 2 traders out there. One has a 30% win rate and another has a 90% win rate. Can you guess who the profitable one is? It was a trick question. You can't guess who's profitable just by the win rate alone. You also need to know their average risk to reward per trade to determine profitability or not. Anyone that only showcases their win rate is trying to sell you on something and a strategy that can likely just not be profitable at all. You would think that the person with a 90% win rate is more profitable, but out of 10 trades, let's say he wins 9 and loses 1. With the 1 trade he loses more than what he made on those 9 trades and then some. Meanwhile, the person with a 30% win rate gains more on those 3 trades than what he lost on those 7 losers. This is what true trading really is. Rewiring your mind into thinking that losing is not a bad thing as long as you followed your plan and your rules, because that is what it takes to be a profitable trader. Now, the final step to it all is getting access to capital. This can be difficult for people starting off, and a large opportunity would be to get started trading with prop firms. These give you the best risk reward and give you the opportunity to leverage your money without having a lot of money to start with. Using these prop firms, you can leverage as little as $100 to make thousands of dollars as long as you are profitable and you maintain the account that is given to you. Inside SM Capital, we've been trading futures and have been making a lot of progress on it lately. The best prop firms in this space currently are TopStep, MyFunded Futures, Apex, and Tradeify. I don't want this video to be extremely long, so if you want a detailed breakdown on how you can go from 0 to 20K per month utilizing these prop firms, click on this video right here, or in the description below, of course. I do a deep breakdown on the prop firm space and give you the best plan and strategy to get your first payout and then scale that to 5 to 6 figures per month. Now, with all this in mind, what is the process on how I actually place a trade from start to finish? Firstly, I analyze and determine where the market wants to head towards. I mainly look for liquidity and imbalances. Over here, we can see that we took out this range low, and at market open, we have a strong displacement candle to the upside with a strong market structure shift with a imbalance created to the upside. If you're confused on these topics, I made a video breaking down liquidity and how you can use that to your advantage to be more profitable and make more money and put yourself on the right side of the market more times than not. The video's right here. I use the higher time frame to determine where the market wants to head towards, and then the lower time frame to execute upon that analysis. So we can see a nice low resistance liquidity run over here. Now, placing the trade is extremely simple. All I do is click buy or sell depending on where I think the market is heading towards. And how I manage the position is all dependent on my rules. I'm not going to go through them over here, but if you are interested in it, leave a comment and like down below so I know you are. I don't want this video to get too long and overwhelm you with information. I know starting off is extremely hard with all the information out there. You don't know who's right, who's wrong, who to go towards, who to listen to. For me to get out of a trade, only 3 scenarios can happen. Either I win on the position and make a risk limit of 2 or greater, or I lose on the trade and lose a risk limit of 1, or it's a break-even trade and I lose nothing and also gain nothing on that trade. On either scenario, I ask myself, did I follow my plan and my rules? If it's a yes, it was a good trade no matter what the outcome was. If I didn't follow it, I find why I didn't and extract that piece of information into my journal. I try to break down why I did something because with every action in trading, there's likely something causing it. So for example, if you're over leveraging or taking profits too quickly, it's likely because you are too fixated on making money quickly and right now. And that causes you to over leverage on a position. And taking profits too quickly can be caused by you being too anxious on that position and you having no confidence on your strategy, which can also be fixed. After I record if I followed my plan or not, I journal my entire trade from start to finish, not just my profits, but also my emotions included. I then analyze the data that I've collected to determine if I could have done anything better. If the answer is yes, I fixate on it and try to improve upon that. But if there isn't, that completes my process. And these are things that we focus on the private side of our trading team. Showcasing good habits that improve your trading and building a community of like-minded individuals that want to improve in trading. In this community, I showcase 5 of my strategies from A to Z, which have gotten me to where I am currently. But anyways, guys, this is a framework that you can follow to put yourself in the best scenario to win and excel in. This way, you won't be wasting multiple years in this industry doing trial and error, but instead following in the footsteps of someone who has actually made it in an industry of a 90% failure rate. If this video was valuable to you, make sure to leave a comment down below and make sure to smash the like button so this video is presented in front of the homepage of someone that might need it. And until next time, I'll see you on the next video. Peace on the streets, son.